Today, German police seized more than $2 billion in Bitcoin tied to an alleged online piracy scheme. Separately, here in the U.S., the DOJ and SEC announced charges in what they say is a $2 billion crypto scheme. And Rene Reinsberg of Celo discusses this morning's announcement that Circle will issue its stablecoin USDC on the Celo network. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies adding to recent gains this morning, with Bitcoin inching higher, trading right around $43,500. Ether climbing more than 3% by noon Eastern, now trading at $2,369. And Solana also gaining more than 3% to $104. Now, the recent rebound in crypto prices comes as the selling pressure for the Bitcoin ETFs, particularly Grayscale's fund, may be easing. Blockchain intelligence firm Arkham said on X that about $192 million had exited Grayscale's ETF today. Now, that number may seem like a lot, but Arkham says that's less than half of last week's average daily volume. Okay, let's talk about the top stories. The DOJ and SEC slapped charges on a group of people for allegedly orchestrating a nearly $2 billion crypto fraud scheme. On Monday, the DOJ announced criminal charges against two people and a guilty plea from a third person for their roles in an alleged worldwide Ponzi scheme known as Hyperfund. Among those charged, the co-founder of Hyperfund, who is an Australian citizen living in Dubai, and two promoters, one from Miami and another from Maryland. According to the DOJ, Hyperfund's promotional materials made several false claims, including that investors who purchased memberships would get as much as 1% a day in passive rewards until the company doubled or tripled the investor's initial investment. Hyperfund claimed that its payments would be dispersed in part from its revenues from crypto mining operations, but according to the DOJ, those operations actually didn't exist. In July 2021, Hyperfund started blocking investor withdrawals. In a related civil action, the SEC charged two of the three people for their roles in the alleged crypto pyramid scheme, which collapsed in 2022. Next, German police have seized billions in Bitcoin tied to a decade-old website which allegedly sold pirated works. On Tuesday, the Dresden General Prosecutor's Office said it had provisionally secured roughly 50,000 Bitcoin worth about $2.2 billion. Those funds came from a website ran by two men, one German and one Polish, that German prosecutors say raised money by selling pirated materials all the way back in 2013. Prosecutors claim the men then used the funds raised from the site to buy the Bitcoin. Now, the statement went on to say that the investigation is still ongoing and a final decision on what to do with the Bitcoin hasn't been made yet. All right, for our main story this morning, the Celo Foundation announced that Circle's expanding native issuance of its stablecoin USDC to the Celo network. So I asked Rene Reinsberg, a co-founder of Celo, about the new partnership and how it can help boost the capabilities of tokenized real-world assets. He also weighs in on current events in crypto.
So you have a big announcement today, and we'll get to that in just a bit. But I want to start off with your insight on crypto. We have seen some major developments in the space since 2024 kicked off. In fact, 10 days into the new year, the SEC announced a landmark decision to allow for spot Bitcoin ETFs here in the US. What does that development signal to you, and what do you think it means for the crypto industry and crypto sentiment?
Yeah, I think 2024 is off to an amazing start. I couldn't have, maybe hoped for a better one. Sometimes it's a little difficult to connect the importance of something like the Bitcoin ETF to Celo or the broader Web3 markets. But the way I see it is it's a moment where institutions are really now coming into the space. And in many ways, the work that we do, while obviously we care a lot about real world use cases, there's a massive acceleration that can come from that. One example just to illustrate that would be microcredit or lending, which with institutions like BlackRock coming and bringing capital, right, that can really accelerate a lot of the local market solutions and projects that have been sort of the last 2-3 years iterating on their model and finding product market fit. So to me, this is a very bullish sign that we will have institutional capital coming into the space and really accelerating the use cases and a lot of the startups that have been quietly building in the bear market.
So last time we spoke, you weighed in on shifting crypto sentiment around the world, saying that in some ways it was improving. You noted that people are starting to look more closely at how crypto can yield real-world use cases. Well, today you have an announcement that the stablecoin issuer Circle is integrating with Celo with the goal of furthering adoption of digital assets and currencies. So how does this integration work exactly, and how does it allow for a new variety of use cases?
Yeah, look, I think it's massive validation of the work that the Celo community has done these last few years, and in many ways, it's also a stamp of approval, right, for the ecosystem. Circle with USDC is really this institutional grade stablecoin that is widely used, widely accepted, and I think by kind of that coming to Celo, I think it can unlock a lot of the growth that I was starting to talk about. And there are a few features that make Celo unique, which I think will be particularly important to this launch, and that and I think the Circle team are particularly excited about. One of those is the ability to pay for gas in stablecoins on Celo, which is a really big deal. And it may seem like a small tweak, but it does enable a user experience where really, if I send someone stablecoin now, the recipient can receive that in an empty wallet, but is going to be able to use that wallet. They don't need Celo. They don't need ETH if this was on Ethereum, right, or another chain. They don't need a native asset to then do something with that stablecoin they just got, but they can use it and basically immediately join this digital economy. And I think that's really powerful when we're talking about how we onboard the next 100 million billion users. That's only going to happen if we remove, more of these hurdles that still exist when it comes to that real world adoption. So yeah, my talking points are, pretty similar to last time. It's those real world use cases. And I think even as maybe the interest in sort of the broader market and Bitcoin prices going up, what is happening, some of that general awareness is coming back. I do think this time is different because this time we have amazing wallets like, Opera Mini Pay we talked about last time, or Valora or other mobile wallets that give people access to so much more than just the ability to buy or sell Bitcoin, but really start participating in this new digital economy. So I think 2024 is going to be a phenomenal year in many ways. I'm starting to see some of the things we talked about come true, and there's a lot of excitement for what is going to happen, particularly around stablecoins and stablecoin usage.
Now, expanding on that, the USDC expansion comes as Celo is trying to be an important part of tokenizing real-world assets, as you noted, placing traditional investments like bonds and credit on blockchains in a token form and using stablecoins for settlements. Obviously, it sounds like you're optimistic about stablecoins. So what's your vision for these cryptocurrencies whose value is pegged to another currency or commodity? What's your outlook for 2024 in that regard?
Yeah, I think real world assets is sort of the mega trend. And in many ways, real world assets as sort of a buzzword may be new, but, I think this has been a long time part of the Celo thesis. If we go back to just the general kind of framing around regenerative finance is only possible if we have real world assets, because we do want to, render nature assets productive in such an economy. And so in many ways, there's a bunch of projects from the very early Celo days that have been working on tokenizing real world assets, and maybe not using that term, but a lot of that, has been in the works for many years. So it's not sort of an overnight surprise that suddenly everybody's talking about real world assets. But I think when we look at real world assets, really stablecoins is sort of the clear early winner in terms of having product market fit, right? I think there's about 135 billion stable coins in circulation right now. I just saw some news that, an investment was made and, was made in stable coins, right? So it's really becoming the norm for especially cross-border payments, or really any payment, right, to kind of, go from traditional financial rails to stable coins, which are, usable 24/7. And, on Celo, it's a tenth of a cent fee compared to what, someone may pay for wire transfer.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, and we'll see you then.